All right, so if you ever need indication, I want you to come here. I don't care what it is, an oscillator, supply and demand zones, it doesn't matter. All right, I want you to come here. All right. Thank you for joining me. I will not do this to you, and I'm about to read this plain chart for you. Thank you so much for those that have actually hit the like button there. I know there's at least 4 of you that supported that information there. If you're new to the channel, check out this video. And this information is important. I may try to touch on this, but not so much. Here, threshold, how far that live candle pulled back, the price action trend, you just need to be able to count to 10, and then the price action method. I use the majority principle, which states that the minority is compelled to follow, so they're forced to do so. Chart scale, I teach you how to read your hard right edge, so you don't even have to look left. All right, so I have an illustration of all of that information right here for you, so you can follow along. Please do that. All right, so we're looking for this. This is your wick zone, which is your threshold. Those two little lines on the bars. All right, that's your threshold. This horizontal line is your midpoint. So we got that illustrated here. 9:30 will be here in a moment. They're at the center of the chart. And again, this is roughly. All right, I just drew that in there for you. The next thing that we're looking for is smaller body, bigger body. This body needs to be able to fit in there twice. And then we have our wicks. We need a larger wick, smaller wick. Our trend is like you and I. Whenever you have a thought, you have the end in mind. All right. So destiny comes with the thinking. The market forms the same way. I want to make sure you understand that. Everything that I go over on this channel is procedural knowledge. All right. It's procedural information. So it's related to an established or an official way of doing something. The mid is getting above it. What is it saying? Now, this is what it's saying. It does have a trend up there. I do believe they can blow that high. I think that high is weak. But that's saying, now I'm just going rough estimation here that they can get through that high. That's what that's saying. Off the center of the chart, it is 930. So let's see if they can actually get up there. Let's see if they can do it. We're going to go right to where it closes. That's all. We'll go to right where it closes, wherever that may land. Now, if it decides to turn around and go down, that's fine too. All right. Okay. Well, never mind. They want to go that way. That's fine if they want to go down. Let me make sure that that floater, I think that floater is on price change. I think it is. Let me make sure. Let me make sure that floater is on. Yes, it's on price change. Price close. Okay, great. All right, so I just wanted to make sure that blue line to keep up. That's all. This high is weak, so they can get through it. But let's see how far they're going to go down. Let's see how far they may want to do that. Now that's big wick, smaller wick, mid falling beneath the low. Everything that I just told you. That's suggesting here. I do believe that high is weak. Now we had a trend off the bottom. Remember, it's just like you and I, the market. 1, 2, 3, 4, 5, 6, and this is 7. So the center of that trend, we're going to go right into the midpoint, just right into the midpoint of that trend. Yeah, let's color this so I don't get confused. It's like you and I. So whenever you have a thought, you have the end in mind. Also, there's primary and secondary value. So whenever you have a thought, there's a cost associated with it. All right, the cost of your thought. The center of your trend, your COT is the exact same thing. All right, so from above it was this: 1, 2, 3, 4, 5, 6, 7. So that's 7. All right, so now let's go here. I'm going to do this. Oh, I got the wrong thing here. Let's go here. All right, just keep an eye on what they're doing. All right, nothing changes. All right, so let's go here. I believe that's correct, and they would have made that distance for the trend down. All right, keep your eye on what they're doing as I draw this information. Please keep up with it, people. Please do that for me. 1, 2, 3, 4. That's 5. 6. This is 7. All right, so let me make sure I did that right. Let me make sure I did that right. So we got to go with that smaller guy. That's not too far off. They still made it either which way. All right, so that's the trend distance. So they made it. That's what you're dealing with when you deal with that information there. And you would go right into the mid of that. That's all. Just go right into the mid of that. I still believe that high is weak. They don't have to come and get it right now. They don't. Just mark it on your calendar, and that's how I look at markets. Mark it on your calendar. Should they ever wind up back up there, you may run into a problem. Here's a reaction off the lower half of your chart. So your bezel, you would take the center of your chart. I should have covered this first, and you go to the bottom half of your chart. All right. The center of your chart will give a response. You saw that at 9:30, it popped up. The lower half of your chart. So you would divide it again. Just divide the lower half of your chart. This is not exact. These lines are not exact. I tried my best to get it as close as I possibly can. And so that's what you have. But there's a response, all right? Can they get back up? Big wick, smaller wick. But remember, they're still trending down. They're just at the center of this trend here. All right, so if you went with the center of this trend here, you would aim up. All closes must be higher than the prior. All right, and you skip any bars that's not doing that. All right, so 1, 2, 3, 4, 5, 6, and that's 7. And you would do this. Of course, they made it, but I want to make sure that you can see it. That's all. All right, so here we go. Then let's just turn this green. I want you to see it. Just for a historical reference, you don't need this side of the chart, but I just want to put it in front of you, all right? So now, this is what we got. I believe it may turn into this. I've talked about this before. Remember these patterns are the things that's going to make it go. It's the majority principle, which states that the minority is compelled to follow. It's compelled. They're forced to do so. However, I want to tell you something. If this is not on your chart, this is what's get ready to show up, all right? You get a bar. The moment that you see this, it's going to happen for at least 4 bars, most of the time, if not more. All right, so you got 2. They only need 2 more, so they may do this for another 2 bars. So this is the next thing that you're going to see on your chart if you're not seeing this. All right, just want to go ahead and tell you that. So we got 2 now. Unless they plan to take off and just go ahead and get down, they're going to stall inside of this bar again. This is weak, so they can absolutely fall through it. That's one thing I can tell you. Now, they should be able to break that low here. That's not a problem. I don't think that's a problem at all. Once it break it, it could end up coming back and doing that. All right, so let's just try to keep that in mind. All right, so we're 5 minutes into this. 5 minutes. Just dividing your bezel on your chart will help you a great deal. All right, so you'll already kind of get an idea where a reaction will be without having to look left, because left will never stop you out, and it never stops me out. Whenever I look at a chart on the left side, it has nothing to do with my orders. All right, so when you're taking your trade, I want you to focus in on this hard right edge. All right, make sure you do that. Let's talk about the threshold now. All right, so clearly they're already through the threshold here, so they're going through the back of this bar. Supposedly, all right, let's see what the reaction is here, because they're hovering right under this threshold, so it kind of makes sense that they went in there. All right, now that's 1, that's 2, this is 3. Can this be bar number 4, or will it just wipe out the whole ordeal, go under here, and then vacuum back into this activity here? Or will it continue on and go ahead and make that target? So you got a response at the center of this trend on the way up. You got a response. There's your response, but they're trending down. Now, it's not too late. I'm sorry I didn't add the bar timer into this. You don't need it. Remember, the things that you're looking for is this. All right, this is all you're really looking for. Now, of course, you can have a bar timer. There's nothing wrong with that, but I want to tell you, it's really, really important that you embrace majority whenever you're looking at a chart. Just embrace that. That will help you a great deal. Will it vacuum back up? No, it didn't. So you only had 3 that time. Pretty close. That's pretty close. All right. Now remember, if they took out, let me draw this threshold here, just in case they want to reach up into it. Remember, if they take out the threshold, if you don't get this, and they take out that threshold, they'll run that bar. So if you got this threshold here on the bar, and they take that threshold out, so if they close beneath that threshold, your stop is in jeopardy. Vice versa. If they take the threshold out here, okay, your stop is in jeopardy. I don't care how long they sit here and try to play with you inside this bar, they're coming to get you at some point. They didn't reach up. They didn't get there that time. All right, so they took out that trend. That's totally fine. They're wanting to move it down. Again, this high is weak. I don't care. They may come back 2 days from now. I don't care. I'm telling you right now, if they come back this way, you can go directly above this high. You can go directly above it. All right, so just try to keep mind with majority if they bring themselves back that way. Just try to keep that in mind and walk yourself right back through that high. All right. Now, let's see what else do they have for us. Now, you can do the threshold on every bar if you prefer. That's your preference. Now, I'm going to tell you my preference. I'm going to tell you what I like. I want to see this. All right, I want 2 out of 3 or definitely all 3. All right, so if you can get all 3 of them, fantastic. It absolutely should go. Let me give you an example of what that looks like. So we want to get this this one can do it. Yeah, so this one here. All right, so all 3 of those are there. You got the bigger wick is bigger than that wick. This body can fit in there twice, and the midpoint exceeded the high. It should go. Let's see, can we find it to the downside? We had it here. We had it here. All right, the midpoint is in between these black lines. It fell beneath that low. Okay, and then of course, yeah, they're going to swing back up there, but it should go. All right, so it should give you the distance of that pattern easily. So the sooner that you can find that setup, okay, the sooner that you can find that setup, the better. All right, and remember we had 930, we had this one. All right, so that one, it made it. All right, so now let's see what we got here. As long as they can stay beneath the midpoint of the chart, and even the more so if they can stay beneath here, fantastic. All right, and then you just hold your trade and allow it to go. All right, the only thing that you would do is try to manage your risk. How far is too far if the bar pulls back? If they come past your threshold, you got a problem. Don't leave a stop there. If they're reaching beyond this threshold aggressively, just cut the trade, come out of it, and wait. That's all you would have to do. Don't widen it. Don't do that, because then it can turn into this and they can begin to climb even further against you. Be responsible. Just cut the trade. Just cut the trade. Just let it go. Don't fight these guys. Let them go and get back in it when it makes sense. That's all. When it makes sense. Like here, when they did this, I knew they would run the back of this bar. They're coming up above it, and they're going to come into this area. So why not just cut the trade if it don't want to go? Okay, if it don't want to go, as it came back this way, let go. They already had made it relative that they were going to go through the back of this bar, but they changed the timing. So let go here. Just let go. Be willing to get back in up here. All right, as you can see, they came back above that threshold. They're going to reach up higher. If they get up above here, let go. That's why you do not want to widen your stop. Don't do that. Just get out of the trade and just wait. Just wait. Just give yourself a moment and wait. All right, so here's the threshold. Again, you could have took it there, stopped there. But remember, if they begin to climb aggressively through this, you have to let go. You just have to let go. Small trade, sure. Break of new lows, they'll come back. I want to tell you that. Let me tell you that. Please let me make sure I express that to you. Break new low, break new high, they coming back. So don't overstay your welcome. I do elaborate a lot more about that on my private playlist on what to do with breaks and how far outside the break they'll go. That's another thing that's really important. How far outside of a pivot they will travel before turning around. I know that too. That's important. How long they'll stay outside of a pivot before they come back. I know that as well. This stuff is really simple. It's not complicated. All right, so make sure you just try to keep that in mind. Look at your chart. Start paying attention. They do the same things over and over and over again every day. Every day they're doing this. See? Look at this threshold. Matter of fact, let me put it on this green bar. You see how they dove to the back of it, but then closed back into it. And that's the green bar. Okay, you don't want them trading aggressively through the threshold, because then they'll run the bar. Here we go. If they do not get back up there, they're going to run the back of this bar. Okay. Then once they run the bar, be careful, because they already done 2 here. Okay, they've done 2 here. They can very much vacuum this bar back into that. I see what they're doing. Big wick, small wick, body can fit in there twice, mid beneath the low. That's great if they can maintain it. I don't like what it's next to, because they just did that. All right, just try to put it all together. Kind of anticipate the next move. All right, let's drop this down here. I'm going estimation here. I see they still dropping. I see that. Okay, they locked it in. Yeah, I ain't too far off. That's saying I don't think they can make that without coming back a bit. I could be wrong. Absolutely, I can be wrong. I was hoping that they'll reach back up here just a little bit before they make that target. they're just going to go for it, I suppose. If they're going to try to lift back up, it'll happen right about now. Let's see if they'll come back off this low. Now they can very much keep running straight to it. They absolutely can. But if they're going to do it, they're going to come back off of it. Right about here. It's either that or pick up speed. One or the other. Here come the buyers. Let's see how far they're going to reach up, or will they just take right back off and run down there? Here come your buyers. Let's see if they'll get back up here. Or at least above this candle, at least. When the market is tanking or rallying really hard, there's behaviors to this information. I go over that type of information in my private community. How to look at the chart in real time and anticipate a move. I can tell you for free here where your high and your low of your bar is actually being set. You can go right into the professional timing videos and learn that. Knowing how far outside of pivots, how long it'll last, when they pushing, will the next bar immediately be coming back towards you? Probability. All right. Those are important factors. All right. So we got above here. I wanted to see if they'll reach here. They may be willing to go get that target though. Let's see. Really simple stuff. Simple stuff. Here we go. Let's see, can we go ahead and get there? We're 15 minutes in. I don't want to hold this video much longer. Relating to an established or official way of doing something. All right, it's an established or an official way of doing something. It's not your oscillator. It's not your moving average. There's an official established way of doing something. When the doctor, when he performs a procedure on you, it's an official or an established way of him doing it. When you go to courts, they have proceedings. All right, I want to make sure that you understand that there's a official and an established way of trading. You have to learn it. I learned it by watching charts. It's really important that you understand that this is a decision place, people. A decision place, and it's absolutely serious. There's no sectioning off where you go be with beginners or intermediates. The moment you start this, you're interacting with professionals. Everybody that does this for a living are professionals. They know exactly what they're looking for all the time. It doesn't change. It's not based on news. It's not based on what someone told me. It's not based on your favorite trader that you're following on YouTube. It's an official, established way of doing something. You need to exercise principles. That's the thing that makes trading different. So if you want results, you have to implement something that doesn't keep changing. I wish you all the best with your trading. Take care.